I think I am in between everybody and drinks and food, so I'll make this quick. Um, do I have a? I guess I'm doing it this way. Yeah, I guess so. Okay. So I'm. Oh, thank you. Perfect. So I am going to walk through what makes Dialectic special and what. How we're able to leverage Wormhole as really our key partner, our key technology stack to produce the best yields in the space, and how you can too. Um, there. So Dialectic is an automated yielding machine. We've built out this tech stack that we call Medici, which analyzes literally more than 20,000 pools at any given time and automates the process of deploying capital into yielding opportunities. So these are liquid yielding opportunities. You could think of them as DeFi, but there's actually a whole range of different yielding opportunities that extend from that basic concept of DeFi. We have three main vehicles. One, and they're all named after Swiss watch complications. We are in Switzerland. So Chronograph is US dollar yielding, Moonphase is ETH yielding, and Calatrava is Bitcoin yielding. And the machine that we built that we call Medici automates the entire process of looking at pools. Our engineering team does the due diligence on each pool and looks at the code based on a series of scores. We put it into an algorithmic risk scoring protocol, and then from there, the Medici will deploy the capital, will harvest at certain times, check when gas is low, harvest, convert back to base currency, and compound back into the pool. And then we have an early warning alerts mechanism that uses a bunch of machine learning and analytics to detect when a potential vulnerability could occur, and then we front run that vulnerability. So we were able to front run the Curve attack last summer. We front ran the Abracadabra attack, so on and so forth. And this Medici software stack has taken us about 3.5 years to produce, and now the machine runs extraordinarily well and really runs on top of Wormhole. And so our our yields just continue to kind of, expand like an alligator mouth versus staking or versus other opportunities. So this is our yield to date. It's actually now over 18% of this year, and that's ETH on ETH. So this is just like single-sided ETH accumulating. It's essentially an ETH maximization machine. Same thing with Chronograph, where already now we're sort of passing 25%. And then we also have, I guess I don't have it, but we have the same thing with Calatrava, which is Bitcoin. So net, we are producing north of 30% on USDC, north of 20% on ETH, and now north of 10% on Bitcoin. Now, how are we able to produce that kind of yield? And the answer to a lot of those questions is using the Wormhole stack. So we layer on different, different stacks of protection and risk management, and we're able to do that by analyzing all 20,000 pools in the space, and again using Portal and interacting with Portal in a programmatic fashion is really an enabling function that allows us to do this. I won't get too much into our risk management. The one thing I will note is that we have just implemented an insurance mechanism with Nexus Mutual, and that's something that we would also like to take cross-chain, and we'll need Wormhole for over time to bring insurance cross-chain. But this is fund-level insurance, I believe the first of its kind of any within crypto. The early warning alerts mechanism, what we do is we track all of the cross dependencies across the space, and again, using Wormhole, using Portal to be able to look at all the different pools across the space and their interdependencies between each other, either on an asset basis, on a chain basis, on a bridge basis, or whether they have sort of shared smart contract code and so on and so forth. And what this allows us to do is compose a total pool risk for any given opportunity that we're looking at. And you have to do this in a programmatic fashion. This cannot be done manually. Nobody's going to look at 20,000 plus pools in a manual fashion. And so our ability to interact with Wormhole programmatically, allow our machine to, via Portal and via the Wormhole stack, analyze all of the pools across the entire space. I think it was maybe Robinson who had just said that somewhere around 300 assets are being sort of tracked in Wormhole. We track more than 20,000, so I think you got to update that number. And this allows us to compose risk, and you can kind of see how a compose risk belongs to a certain set of assets, a certain chain, and potentially a bridge risk as well. And then with that compose risk score, you get you're able to stack and diversify in an elegant fashion. And so, in order to do this, if you're doing DeFi or yielding of any kind in the space, you must go cross-chain. And what got me so excited about Wormhole initially is it really is taking forward and executing on the dream of cross-chain interoperability. I notice a lot of familiar faces in this room, and every time I come out here to Hong Kong and to China, I see a lot of familiar faces. And what we were hoping for in kind of that 2018, 2019 era, talking about interoperability with Polkadot, I see executing with Wormhole today. And that's why this is the project that we're most excited about. It's the tech stack that we use most on a day-to-day basis. And it's also the team that is sort of most proactive and most easy to work with. A lot of you who have worked in the space in the past have noted that dealing with senior management in different teams has often been really, really challenging. Getting them to take your feedback as a user and do something with it has often been a big sticking point in the space, whether that's Polkadot or Ethereum or any other tech stack. With Wormhole, we don't see this. We see an incredibly professional team that is constantly evolving their products and evolving it for users. So we have, I think, a bi-weekly with the Wormhole team, and I don't think that's isolated to us. I think there's probably dozens of Wormhole community members that have weekly check-ins with the Wormhole team and are able to provide feedback and work on things, and we see the iteration of the tech stack, and it's really exciting to be a part of. So there's a few things that make Wormhole absolutely indispensable for us. I talked about kind of that programmatic interaction to be able to analyze thousands of different pools across the space and how it's absolutely necessary. But and Robinson and Dan kind of mentioned some of these, but just the broad support across the space. If you're trying to do DeFi and Ethereum, you realize that you're likely not outperforming Fed funds rate, right? Aave, Compound, Curve. These are not compelling yields. If you want compelling yields in this space, you absolutely have to go cross-chain into more esoteric ecosystems. And the best path to do that is unquestionably Wormhole. This is not, this is not my opinion. This is just fact. It allows us to connect with all of the major chains. In fact, we need to update this. This is now close to 40. One really interesting thing is almost $50 billion in DeFi TVL. When we started doing this in earnest with Wormhole about a year and a half ago, the total TVL in the Solana ecosystem was about 480 million. Today it's past 5 billion. and the total DeFi ecosystem was only about 8 billion, and today we're up around 50. So you see how, like, this has been an incredibly enabling technology to DeFi itself. I don't think Wormhole gets enough credit for this, but if it wasn't for Wormhole, we would not be where we are with DeFi broadly. I am trying to, maybe I should move over here. And so these are numbers on a page, but really, like, the gravity of this cannot be overstated. A lot of us have been excited for a multi-chain future of Web3. It's been a vision that we've all been communicating for quite some time, and we're finally seeing it unfold. That's an incredibly inspiring moment. One really important thing is level of efficiency. So we're an institutional shop. Execution efficiency is absolutely paramount for us. And if you look at just sort of like a comparison of Wormhole versus other things, you're talking about seconds versus tens of minutes at time. So competitive pricing on deployments, on gas, on exchanges, as well as fast execution, which I think is going to continue to get better with Portal. So this doesn't matter to like a retail shop, but it matters a lot to us as an institutional shop, right? We're in anywhere between 150 and 250 pools on any given day, and they turn over every 3 days. So we're talking about spending, between $500,000 a week on gas, and Wormhole is able to drop that down by, basically a factor of 2. But so all those things are great: performance, TVL, size, connecting the space, allowing you to interact with it programmatically, which is absolutely necessary in a modern DeFi environment. But the one thing that I've been really, really impressed with that sets this team apart from any of the other teams that I've worked with in the past is their understanding of the human side of building a chain. Ultimately, these are social consensus systems. And what that means is that it's people dealing with other people to come to decisions to push something forward. And the Wormhole team really understands that, and they've gone out and done the work, pounding the pavement of building business development relationships. Being here, being global, being all around the world, building important relationships with major ecosystems. And I think that's really important. That was the thing that really gave Solana success to start, is they were the first team to note that being inviting and bringing more people into the ecosystem, whether it's investors or developers or marketers or any ecosystem participant, just being inviting was a positive thing to do. And the Wormhole team has really taken that to the next level. And these types of characteristics are what you want to bet on in this space. As I move forward, I'll take a slight hit on technology if it's being run by a really credible team. And I think a lot of people in this room would probably make the same decision. And so how professional and how proactive and how sort of business oriented this team is one of the indicators that we note in great success that I think Wormhole will have moving forward. And then the last thing, which cannot be overstated, we have 3 years of uninterrupted uptime. That is actually quite a rarity for an ecosystem of this size, magnitude, and complexity in the space. The number of Guardians, I would say, has reached a level of adequate decentralization to compare it to other major ecosystems, and I think that's really important. So in doing deep dive due diligence on the Guardians, on the tech stack, on the interoperability, on your sort of ability to interact with it in a programmatic fashion, whether that's Gateway, Connect, Portal, or otherwise. Their commitment to security has been, really, really strong over the years. And as they have separated out from Jump, you've seen that continue to grow. And so this is a really professional team that is really easy to work with. But at the end of the day, they're also really responsible about their, their path forward. And I think that is it. I'm happy to take any questions, but sort of the net is, yes, we produce the best yields in the space, to my knowledge. It is uniquely enabled by Wormhole. And so if you want to try to replicate our yields, you have to do two things. One, you have to do it in a programmatic fashion. If you're yielding in a manual fashion, we're eating your lunch. And number two, in order to do it in a programmatic fashion in scale, you need Wormhole. You need Portal, you need Gateway, you need Connect, you need to connect with the team, and that's the path. And you two can make really outlier returns in this space by leveraging Wormhole's tech stack and their extraordinary team. And that's the lesson learned here. Yes.
Yeah, I just got a question. So I'm curious, who is the audience of this new product? Is it public or people, or maybe you just brought a different strategy for the
Yeah. So you're talking about Dialectic.
Yeah.
So we are a fund. We're a Cayman, Cayman regulated fund operated by a Swiss asset advisor. We have considered opening it up to, and making it an online portal, which maybe we'll think about doing next year. But today we're a fund, and it's mostly a prop capital. So it's invite only, and it's mostly just friends of ours who've done well with us over the years. And we try not to be too big, because you can't produce. As you scale capital, you stop being able to produce these types of returns. So it's not infinitely scalable.
When SOL yielding?
Sorry?
When yielding on SOL?
We yield on like SOL native yielding, like having a SOL. So that's an interesting question. So for 3 years we've run these two. And so on average, over the course of 3 years, Chronograph has produced north of 30%. Moonphase yielding has been more volatile, but again, north of 20% for the last 2 years. And I kind of said, look, why do anything else, right? When you can produce 30% on USD and it's 5-day liquid callable, and 20% on ETH, why go into SOL, which you can't really get north of 10%, or Bitcoin, which you also, today we produce north of 10%, but on a relatively small base. It never occurred to me that other people would find those types of yields interesting. I personally am of the mind that if you're going to be yielding in this space and accounting for all the risks inherent in crypto, that you must produce a minimum of 3 times Fed funds rate. Fed fund rate today is a little under 5, so call it about 15% is table stakes on yield for just being in the game. So for me personally, below 15% doesn't make sense on a risk-adjusted basis. Funny enough, that logic doesn't really apply to Bitcoiners, and I'm finding it also doesn't apply to Solana enthusiasts. Now, Solana native yield is even lower than Bitcoin, and so that's the reason why we don't have that. If that changes, I think we could get excited for a Solana native yielding vehicle, but I still question why when we can produce, really ultra high yields on other assets.
My question is about the valuation stuff. On Binance right now, the Wormhole market cap is about 500 million.
Yeah.
So what is your prediction of this project in the bond market?
Yeah.
For the market cap?
Yeah, that's a really good question. Now I know you. So what you're noting is trading volume, right? The fully diluted valuation of Wormhole today is about $2 billion, and some of the metrics that we look at are say like TVL to FDV, or more importantly, in the case of Wormhole, transaction throughput to FDV, right? And if you look at that and compare it to other bridging ecosystems and bridging protocols, I would say Wormhole right now looks really nicely underpriced. We're, full disclosure, I'm continuing to accumulate. We bought some more a week ago. We bought some more 6 months ago, and we also participated in the first round. And so we continue to accumulate, and unabashedly so. I think there will come a time where people realize that this space is a poly-chain or multi-chain ecosystem. It won't be one chain to rule them all. That won't be Bitcoin, it won't be Ethereum, it won't be Solana. It's not going to be one chain. It's going to be an interaction of chains. I think we see that with, say, the Sony announcement yesterday or the day before, right? Something like that Sony chain indicates to you that there will be a multitude of chains. And if there are a multitude of chains, then technology that allows us to connect chains is an absolute necessary part of the ecosystem. And so I personally think that Solana is a really good buy. Solana is also a good buy, but Wormhole is an excellent buy right now. And fortunately, in previous times when I've been out here and recommended buying something, whether that was at Polkadot at 32 cents or Filecoin at 52 cents, the people who paid attention did really well. And I think right now, Wormhole at, I think it's about 18-20 cents today, is about as good an opportunity as you're going to find in the space right now.
Okay, thank you.